in this video, I'm going to do a little bit of market breakdown. But before I do that, I'm just going to share with you some stuff that I shared with my students on Saturday for the masterclass. So stay tuned and let's go. So a professional trader is not someone who is trading with 5 screens or has $1 billion in his account. You could have $1 billion in your account, but you might not even be a good risk manager, or you might not even have a good strategy, or your psychology might be poor. So being a professional trader is not defined by your suits that you wear, the screens that you're trading with, the office that you are in, and the lifestyle you show, because a lot of people show fake lifestyle, like Lamborghinis, and it doesn't make you a professional trader. When it comes to trading is an individual business that you do alone, you and your computer. You don't need a crowd, So what you show the crowd is just what you want them to see. But when it comes to real business, this is it. Once you master the risk management, you master a strategy, you have a good strategy, and then your psychology is right, this is where you're going to land, And these things, they are interdependent on each other, they are interrelated. So you could have a good strategy, but if your risk management is poor, if your psychology is poor, this is not going to work, So let's start with this one. So let's say risk management. Risk management is basically minimizing your losses and maximizing your profit, right? Yes. So if I'm trading, I have $1,000 and I'm risking just 1%. This is $10, right? If I lose any trade, I'm just losing $10. Just $10, right? So if I lose one trade, 1% is gone. 1% of my account is gone, because this is what I'm risking. If I lose 50 trades, 50% is gone, right? So in order to bring this account to zero, I need to lose 100 trades. You agree? If I give you a coin to flip, a coin has 2 sides. We have the head, we have the tail. There is no way you're going to flip a coin 100 times and you're going to get all heads. I don't think it's possible. Even if you're a good flipper, you will flip, some will be head, some will be tail, like that, right? So here, no matter how bad of a trader you are, you're still not going to lose 100 trades in a row. Even if you don't know how to trade, like you're a complete beginner, if you are respecting risk management, you are risking just a little, there is no way you're going to take 100 trades and all will be losses. You can give your phone to a baby, tell the baby to randomly click buy and sell 100 times. It's not going to be 100 losses in a row. It's not possible. You are risking just small of your capital. But in this same scenario, if you are risking 50% of your capital on one trade, which means once you take the first loss, you are down by negative 500. The second loss, 500, and your account is now zero. So you had just 2 shots. If you flip a coin 2 times, there's a possibility of getting all heads.
Getting tail or head at the row.
Of course, it's very possible. So no matter how good of a trader you are, it's very possible to lose 2 trades in a row. I mean, it's normal. You can take a first trade loss, second trade loss. So if you are risking 50%, those 2 trades are just going to bring your account to zero. And this is not how to trade as a professional trader. So you can see here, it all has to do with your risk. That is why we spoke about this. It all has to do with your risk. So last week we talked about this. If I come today and I tell you, oh, I took 10 trades, I took 10 trades, 7 were wrong, just 3 were right. In your eyes, this is a bad result. Because I lost 7, I won 3. But in trading, if you are risking, then there is a reward as well, right? We are risking to make something. So we have the risk and the reward. So if I'm risking, let's say 1%, then I'm looking forward to make 3%. This is an example. So my risk to reward is 1:3. Which means if I lose 1 trade, I'm just losing 1%. But if I win, I'm winning 3. This is a risk reward. So in this scenario, in your eyes, this is a bad result. But remember, if we lose 1, it's 1%. So here we lost 7, it's 7%. But if we win 1, it's 3. So it's 9. So here we are in a negative 7, but here we are in a positive 9, which gives us a profit of 2. So, you know, it's not even about how much I'm winning, how much I'm losing. It's about how much I'm risking. So if I tell you I lost 3 trades, I won 3 trades today, I lost 7, you cannot just judge me by this. You can ask me, what was your risk to reward?
Risk to reward ratio.
How much did you risk? Because I can also tell you, I won 9 trades today, I just lost 1. In your eyes, it's a good result, but what was your risk reward?
Yeah.
Maybe in all the 9 trades, you were risking just 1% to make 2%. So you won 9, right? So 9, 18, right? Yes, you won 9 trades. If you win 1, it's 2%. If you win 2, it's 4. So you won 9 trades, you made 18%.
Yeah.
But the last trade, the 10th trade, instead of risking 1, you went to risk 50. And then you took a loss. So here you are up by positive 18, but just 1 loss brought you down minus 50. So you can see total you'll be down by negative 32. Even though you won 9 trades, you lost just 1. But what was your risk? What was your reward? So the most important thing is the risk to reward. How much you are risking. You know? So that is very, very important when it comes to trading. This risk management part. Because this is the only thing that is going to make you... It's not the only thing, but trading is just a game of probabilities. You know? Trading is a game of probabilities. It's either you are winning or you are losing. But at the end of the day, you want to be... It's a 50-50% chance. See that you have a 50% chance of winning, 50% chance of losing. But if you have a good risk-reward management, if you have a good strategy, and if you have a good psychology, at least you'll be up maybe 70-30. And 70 will be your win, the 30 will be your loss. And you'll be profitable at the end of the day. You know? So that is the psychology part. The strategy part has to do with your system. What is your system? How well do you know your system? You know, trading, we have so many strategies. People use indicators and this and that and that. So how well do you believe in your system? You need to have a system that has been tested and proven to be profitable, to make money. You understand?
Yeah.
We have something called back testing. Back testing is whereby you go back to your past data and then play the market as if it's a live market. You are testing out your strategy. Your strategy should be as good as how people believe that Lamborghini is fast, you know? Because see, if you tell me that let's go and race, okay, let's go downstairs, let's race. Okay, I have a Lamborghini. You have a bicycle. Okay? So this is my Lamborghini, this is your bicycle. Let's race. If we start the race, 1, 2, 3, go, and then you start moving. All right, you're already on your way. It's not a motorbike. It's a bicycle. You have to paddle. Okay, so you're already on your way. I'm trying to start my Lamborghini. It's not starting. You think I'm gonna be fearful? You think I'm gonna feel nervous or anxious or something? Maybe I'm gonna lose the race? No. I know the car I'm using. This is a Lamborghini. You can go as far as you want. But once this starts, you are just gone. I'll just pass you in 1 second. So I believe in what I'm using. That is how I believe my system. So I could be taking losses, but I know once I get 1 trade that is profitable, I'll still be in profit. Just by understanding the risk to reward. So the psychology is dependent on strategy. It's also dependent on your risk management. Because see, if I'm trading and I'm risking just 1%, when I place a trade, there is no need for me to be fearful or anxious. Because I know if I lose this trade, I'm just losing 1%. It's just $10. So why should I panic if I take a trade? So here I'm helping my mindset. You understand? I have a good system that I'm using. Why should I panic when I lose a trade? You know? But if I place a trade, $1,000, and I'm risking 90% on just 1 trade, which means if I lose, 900 is gone. Why am I not going to panic? I'm going to panic because I know if I lose this trade, my account is gone. So no matter how good of a trader I am, I'm still going to be in a panic mode somehow. Even though I trust my system, but hey, this is shaky. I'm risking a lot.
And that psychology, strategy, and risk management thing goes together.
They go together. That is why I drew this triangle. Actually, we took a lot of trades this week, but I'll just go on and break down one or two pairs. So starting with GBP CAD, when the market opened, we opened right here. Let me just put on this indicator. The market opened right here, right? So before the market opened, we spotted a left shoulder, the head, and the right shoulder, and this was a move to the upside, right? And mostly when price moves impulsively, there is always a correction before the continuation of the trend. So looking to our left, we identify an area of value. This was like a resistance level that caused price to go down in the past, right? And that is where the market actually opened. So let me go down on the lower time frame. On the 1 hour time frame, we spotted this left shoulder, this head, and also a right shoulder, right? And we had a break of the neckline. So this was actually a change of character. This indicated that the 1 hour time frame is actually a downtrend, right? So this is where the market opened. So going forward, we are just waiting for a pullback. This was a pullback to this area of value, and then we spotted this nice candlestick. This was an engulfing candlestick. This gave us the entry reason. So we got in right here, and then we had our take profit level right here, right? So this was the first trade. If I activate my trading session, I actually trade during this shaded session, right? This is the landing session. So this is where I'm active on the chart. The white portion, mostly I'm not on the chart. So this is the New York getting to the Asian session, right? So this is the time that I'm asleep, and this is when I'm active on the chart. So this is where we took the first trade. We closed it somewhere here, and then looking forward, this is where I was actually asleep. So this was around 9, 10, 11, 1, 2, a.m., right? So I was asleep. So when I woke up, I saw price just correcting, and after every impulse, there is a correction. Since we were on a downtrend, I was just looking for selling opportunities. And if I'm selling, I don't want to sell at the lows. I want to sell at the highs, right? So I don't want to sell here. This is where I want to be looking for selling opportunities. Here, I'm not going to sell. I'm waiting for price to pull back and look for selling opportunities somewhere here, right? So this was just an impulse correction, a break and retest trade. So looking to my left, this was a nice area of value. Price just pulled back to this area. And then I went down the lower time frame, just added my entry strategy, right? So I'll just break it down a little bit. On the 15 minutes time frame, what did I see? This was my first touch, second touch, third touch. At the area of value, I saw this engulfing candlestick, right? So this right here gave me the entry reason. I got in right here with my stop loss, and then my take profit was at this level. If you look to my left, we could see this area right here, right? This was a support level, and then this was also a pullback to the neckline of the head and shoulder. Mostly when price creates the head and shoulder pattern, price is likely to come back to the neckline for a retest. So this was the head and shoulder pattern. So I was expecting price to at least come here for the retest. That is why I took my profit here. So if you look at these two trades, let me just go down on the 1 hour time frame. If you look at these two trades, the first trade was around 3.8%. The second trade was also around 6%, right? One of my students passed the first phase of the My Forex Fund Challenge with these two trades, and it was really amazing to see that. So these are the two trades that I was taking on GBP CAD. Here on GBP JPY, this is exactly where the market opened for the week. So when the market opened, we were just looking to our left, and then we realized the price is actually heading towards this resistance level. This is a level that price got in the past and got rejected, right? So when price was going up, I was cautious of what price is going to happen. And also looking to my extreme left, we can also see that this is also a major resistance level. So looking to this level, this is a resistance, price was actually heading towards that level. So I wanted to see the price action at that level. That is my interest. On the 1 hour time frame, when the market opened, we just saw price just breaking structure, right? This was a break of structure. We pushed up, break another structure, and then pushed up. But if you look at this move, this was an impulsive, this was a correction move, and that is when we also identify our pattern, right? So this was a rising wedge pattern. And those of you in the mastery class, you already know what we'll be looking for with this pattern, right? The first, second, third touch, we can either take the risk entry or the reduced risk entry. On the 15 minutes time frame, this is what we saw. Let me just zoom in, and then you will see we saw this left shoulder, head, right shoulder, break of the neckline, price actually impulsed to the downside, right? But this wasn't my trading session. If I activate this wasn't my trading session, right? So when I woke up, I saw price somewhere here. This was my trading session, and what I saw was, okay, this price was actually ready to go down. I just needed an entry point. So I saw this impulse, and then I went on the 5 minutes. That is when I got an entry reason, right? So this was an impulse, it was a correction. I waited for the end of the correction just by using the strategy, and then I got in somewhere here, right? So this was also a nice trade. This was an impulsive move, correction to the upside, right? There's a flag pattern, and then also a break to the downside. So this was also a nice trade that we took. Let me go back on the 1H time frame, and then let me just take this out. So going forward, I also took another trade somewhere here. So let me just activate my sessions. This was just the first day. The white session is when I was asleep. So when I woke up, I saw this correction phase, and this is the same entry style that played out on the first pair that we just saw, right? The GBP card. So this was an impulse, there was a correction. We just need an entry reason. That is the main thing and the most important thing, right? You could spot the direction, but what matters is your entry reason or your entry point. How are you going to enter the market? And that comes with a strategy. So going down on the 15 minutes time frame, this is where I spotted my entry, right? So I spotted my entry somewhere here. This was my entry, my stop loss somewhere here, and then my take profit also here. So this was also a nice trade that we took. We also took another trade somewhere here. So I'll just take everything off and then go on the 1 hour time frame, and then you will see what I'm talking about. So on this 1 hour structure, we had a lower low, lower high, lower low, and then price came to break this high, right? So we had a change of character. This was the left shoulder, the head, and the right shoulder. So we took out this high. This was just a break of the neckline, retest, and then this is where we also got another entry on the lower time frame. I actually shared this trade in a public Telegram. This was the setup GBP JPY. I shared this in the group, right? So left shoulder, head, right shoulder, price was somewhere here on the 15 minutes time frame. This was where I got my entry. So going back to the chart, this was where I got my entry on the 15 minutes time frame, and then price actually impulsed to the upside. So here we had a break of the neckline. Price broke the neckline impulsively. After every impulse, there is a correction. So this was the correction phase, and then we took our entry somewhere here. Then price moved to the upside and then hit our take profit. With this trade, I think we took the entry here with a stop loss somewhere here, and then the take profit was here. We didn't hold this trade to the upside. This was just the take profit, and it was also like very profitable because it gave us around 1-3%, which was actually solid. So I hope you enjoyed the video. If you really want to learn how to trade, if you want to take trading to the next level, the membership link will be down in the description. You can sign up and become a member. You can also join a free Telegram group. The link will also be down in the description. Make sure you like this video, share, and subscribe. We out. Peace.